Good evening. It is Monday, June 20th, 2022, 9:41 p.m. on the East Coast, 6:41 p.m. on the West Coast. You might hear the hockey in the background in the other room. I'm a hockey fan now. I might need to get a Canadian passport at this point. Most of my trading is done on the TSXV. Junior mining investor, analyst, and now a hockey fan. So I don't know. It might be time for me to hand in that U.S. passport and become a Canadian. And also, I prefer the Maple Leaf gold coin to the American Eagle. So I'm a Canadian, folks. Anyway, I want to make this video because I think it's timely. And even though I'll be speaking with Trevor Hall tomorrow afternoon, doing a little bit of an interview, I want to get this sort of down right now because I think it's important. It's interesting. Skeena, I haven't owned this, just been watching it. I think it's an important stock in the gold junior mining sector. You can see that Skeena had a tremendous 2020, basically bottomed during the COVID crash at $2. And then by year end, it was over 12. So absolutely incredible. 2020 consolidated for about the next year or so between 10 on the downside and a high of 17.11. Peaked in March, and it's been just downhill in pretty much a straight line ever since. So this is now a more than 50% drop in one of the best development stage gold projects in the world, certainly in North America, at the Eskay Creek project. One of the highest grade gold and silver projects at feasibility stage in the entire world. They're supposed to produce a feasibility study very soon, in the next couple weeks. Clearly, the market action, the price action's not heartwarming. It doesn't inspire a whole lot of confidence. But I also just feel like while maybe the feasibility study is not going to be as good as people thought it was going to be in March, on the cost side, I just feel like this is a sort of a sentiment washout too. This is actually a very interesting technical setup here. With this gap filling coming down to the 200-week moving average, big, Fibonacci level at 7.77. We're at like 790 here as of the close today. It's really oversold. I mean, this is really, really oversold. I post this chart on Twitter and it gets one like. Okay, so if I had done that a year ago, or even back in March, if I had posted a Skeena chart talking about an interesting technical setup, I would think I would have easily gotten 10 thumbs ups at minimum. Yeah, it was a holiday day in the US today, but whatever. I mean, one like. And just some of the stuff I'm seeing, like take a look at the emo channel. Like this is a dumpster fire. This is a dumpster fire. And just looking at co.ca, people are really short-tempered. People are bashing each other. People are trying to call other people out for all kinds of crazy things. Just fighting everywhere. It's like a bar fight. Like co.ca is literally a bar fight on the index. Here, just take a look. Only brainless idiots, blah, blah, blah. It's incredible. I don't think I've ever seen it this bad. So from a sort of a market observer, somebody who's been on co.ca since the inception, observing this behavior here in the last several days, how the forum has gone south rapidly. For every 100 posts that I see, there might be one possibly 2 of any value add substance. That's how bad this place is getting. I mean, just look at this. Just look at this. This is just all garbage and fighting amongst each other. Um, so from a sentiment standpoint, it tells me these things tell me the Skeena chart, the emo channel, what I see on the index, what I see on Twitter. Sentiment is washed out. I mean, we're at capitulation, levels here. If I look at the emo chart, just taking a look at the channel got me to take a look at the chart again for the first time in a few weeks. I mean, obviously, there's no clear signal here at all, but it is consolidating near a pretty important level of support at 125. And it's been sold down in recent days on really light volume. It kind of has a look like a stock that's all sold out. And just any little uptick in the sentiment buying interest could bring this back to 160 or 170 very quickly in my mind. On the downside, obviously, you have 125 as a key support level, and then bigger picture, $1 is an absolutely monumental level. If emo gets under $1, it's not a good thing, to say the least. So, at 130, you could say, well, I'm going to risk 25% down to $1, and this thing could easily rally back to 170 or even up to $2 on any positive news or any expectations or hype around positive news. But obviously, we have transitioned from a market where fear is in control instead of greed. And so it's much harder for stocks to generate that sort of 20 to 30% move to the upside, because everybody is so fearful and they're much less willing to speculate on good news. But the point of me just talking about this is to point out the sentiment in the sector. I have no position in emo unless something changes in the chart setup in the next couple of days. I don't plan to have one, but I just wanted to point that out. I also want to point out this Quantifiable Edges article that he put out today. And basically, he's saying that Friday was a capitulation day across the market, and I have to agree with that. And we're already seeing it in the futures. The S&Ps are up to 3720. Oil's up over 2% to 110.33. But you can find this article, you can read it yourself, but this is a very strong buy setup for at least a short-term trade. So maybe a 1 or 2 week rally in the market comes after the sort of washout selling that we saw on Friday. And, there's no better example of a selling washout than oil services. So, we were having dinner Friday night, and I was saying the OIH trade, I was early on this, but I've been surprised at how powerful this downdraft has been. And basically, the only way that I think the OIH is not a buy at 235 right here, right now, is if we are literally heading for a 2008 sort of iceberg. That's the only way that I see this going lower from here in the near term. And honestly, despite the fact that obviously market conditions are very challenging, sentiment is very negative, there are plenty of headwinds out there for the economy and markets, I don't see this as being a 2008 situation. There's no market like the housing market, a multi-trillion dollar market that is completely cratering, like happened in 2007 and 2008. And there's not the sort of subprime, mortgage bubble, again, on the order of a few $1 trillion imploding, Yes, we're coming from a very bubbly environment in 2021. The Fed has to tighten in the face of really high inflation. The, consumer sentiment is extremely weak, yada, yada, yada. I get it. I get it, but I still don't see this as being a 2008 implosion kind of a situation. I think that we're just in for a tough year. We're probably in a recession, but that doesn't mean markets crash in a straight line. And this leading indicators chart, I think, is very telling. And I think this helps to show how the Fed, it probably as soon as September meeting, maybe even prior to that. So let's say 3 months max, they're going to be looking at the data and they're going to be saying, oh, inflation is coming down a lot and the economy is really decelerating and actually contracting. And you'll have the pivot coming. And the market will tell you the pivot is coming before the Fed does. And so that's what you need to realize here, that this market is a very, very fast market. And the market could sniff out the pivot coming as soon as 2 weeks from now, right? Or 2 months from now. But either way, it could come relatively soon. And stocks will already be up 10 to 20% off their lows by the time that you get a Fed speaker even hinting at it. Okay. And so I think that conditions are sort of ripe, and also just think about all the negative news that's happened in the last week across the world in markets. I mean, I feel like there's been no good news. I haven't seen any good news anywhere. And, stock prices are way down, sentiment is abysmal, and we've just been pelted with bad news after bad news. My experience is that after a situation like that, either the news flow starts to get less bad, or you start to get some, surprises to the upside, actually. And again, stocks can also rally just because everybody is freaking shorted in cash and petrified. Okay. And I think that's sort of the situation that we're moving into here. And I'm not making a bullish long-term call that I think you go all in stocks here and you're going to make 20% between now and year end. No, I'm not saying that, but I think that at the very least, so let's say short-term tactical trading call, in the next 1 to 2 weeks, we could get back up to around the 3850 level in the S&P. So, what is that? 4% of upside. Maybe the average small cap stock could be up 10% or a little more over that time frame. The OIH could certainly get back to 250s or 260s in the next couple of weeks. So a decent little trade setup here on the long side, sort of a swing long with a 1 to 2 week time frame here across markets. And just one final point, like Halliburton has a very big support level around 30, 31 area. We're basically there right now, maybe a little bit of more downside available. But if you take a look at the earnings estimates for the oil and gas sector, the refiners, the oil services, either the earnings forecasts for the coming several quarters are completely wrong. Like they're going to come down like 50%, or this sector is too cheap again. Like that's literally the situation. So you need to ask yourself the question as an investor: is oil going to come back to $80 in the next 3 to 6 months? If that's the case, then okay, the oil stocks can fall further. If oil is going to stay at 100, so it could still drop another $10 or be above 100, then these stocks are all a buy right here, at least a buy for a short-term trade. And right now, as I'm typing, as I'm making this video, oil is back above 110, right? And so these companies, Halliburton, Schlumberger, Chevron, Exxon, are all hugely profitable at $100 a barrel. Hugely, just cash cows pouring out cash at $100 a barrel. At 110 a barrel, I mean, it's just an embarrassment of riches, and then anything above 110 is actually probably excessive. These companies are hugely profitable at this oil price, and even at lower prices. Okay, so unless we're heading for a 2008 kind of complete obliteration crash, I think that we are in for a tradable bounce across the stock market in the next couple of weeks. Have a great rest of your evening. Go Lightning. I'll see you in the trading lab.